Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Mr. Marco.
Hello.
How are you, man?
Good. What's new?
What's new? You know, I'm looking at, we mentioned yesterday, 416 and a half. 416 and a half. That's like the magic number in the SPY. So, you know, just to start off, I wanted to show you something, how interesting, these things, these things are. So I'm looking at, can you see my board?
Yep.
So let me open it a little bit more so we talked about it yesterday. Just get a little bit bigger here. Okay. So we talked about it yesterday, that level 416 and a half, and how, whatever it's called, I call it a pivot level. And for whatever reason, this sort of seems to be the level, right? You try to be long above it, and below it, you try to be short. So yesterday you had this move open here, down, comes back up, trades up through it during the day, trades down. First 20, 30 minutes is always a little bit crazy. But, again, if you're leaning on it, maybe you try to buy it here for a move back up to 419, breaks through. You have to, really respect this 416 and a half level. Trades down a point and a half, climbs its way back up. Again, through it here, you're likely trying to buy a little bit here, trying to play it to, see if this move back up to 419 is what the market wants to do. So this 416 and a half, if you're day trading, you're keeping score for, a period of 6.5 hours in a day, this is the level. For whatever reason, I don't know why, but it's the level that the machines have chosen to say, we're going to buy it. And if it goes through, we're going to be buying the dips a little bit here, and we're going to try to take it back above 416 and a half. If it goes through 416 and a half, you got to just turn around and kind of say, all right, well, the long didn't work and we're just going to wait. But I think for whatever reason, 416 and a half seems to be this pivot. So just keep an eye on that and sort of gauge where you think the market might be going. But I would say in general, I'm a believer that we probably have to go touch this 410 sometime pretty soon. I'm not sure exactly when, but shortly. Okay. So that's what I would say there. And then the other news that I thought was interesting as far as market news was recent announcement. The federal judge overturned the ability for the people to stay in their homes. What do you call it? The ban on what do you call it? What was it? Did you see the headline?
Yes.
It was the ban on getting people out of your home. What do you call that? Evictions that you can't, you can now go out and evict everyone, which is perfect since nobody's been paying their rent for the last federal judge overturns the national eviction. That's what I saw on CNBC. So nobody can stay in their homes anymore without paying their rent, which was killing the landlords. And in fact, there's like, I think from 2 to 4 units, there's like 40% of the owners are non-white people. So it was hurting everyone. It's not like it's just hurting one part of the people. Over the course of the last 10 years have been buying units and renting them out as a business. And real estate for the most part has worked over time. And it's an interesting, overturn and most people I'm sure are pretty happy, but what does it mean for the market, right? There's a supply demand imbalance. And I bet a lot of the people who have these buildings or homes that they were renting and haven't collected rent in a year, but the price of the homes have gone up, might want to get their money back because they're probably not going to get the money from the person that they got to go through an eviction process now to get the person out of their home. So that's one that's going to take probably, depends on where you are, a month to 4 months, and then, or 6 months. And then they'll just say, all right, then I want to sell my home. So you might equalize that supply demand that's around. Maybe, I don't know exactly what the numbers look like, but I started thinking through what that meant for supply and demand. And I think that I think that the I'm sorry, let me just shut this off. I think that it's an interesting, it comes at an interesting time. There's people hurting. You talk about people just getting back to work, and these landlords, they're vicious. I mean, at least in New York, they are vicious. They, the minute you say it's okay, they're out there. Now I don't know if the states have more power now, and they're saying no, on the state level we're gonna keep it but on the federal level they overturned it. So you're gonna get a lot of lawyers sending eviction notices to people at a time where homelessness is a problem, food stamps is a problem. So something interesting I think to look at in the backdrop of what we're seeing. Talking about mortgages, I think that another name that's interesting that I wanted to at least talk about because I watch it a lot and I like the stock long term, and that's Rocket. Rocket is something that, big company. They IPO'd only a small percentage, hoping that people would see that they were a technology company. Basically, they're a mortgage broker using technology to get into the first place in that industry. And while they've done a great job in that, the problem is the backdrop of the business right now. Call it mortgages and houses. We're going through a period where interest rates are potentially going up, and interest rates go up should reduce some of the demand for big mortgages because of the interest and obviously the bigger monthly payments for the home. So there's the next 2-3 years. The market's always looking forward. It has been putting a little bit of pressure on Rocket over the last, let's call it 6 months, because the numbers are fantastic. They're producing, but what does the industry look like when interest rates go up? Now interest rates are going up, and where are we? Also, they had a large business. A large part of their business was in refinancing. With interest rates going up, that's no longer a business. So they will do well versus their competitors, but nobody may want to own a mortgage originator or broker at this time during the cycle of buying homes and buying and selling homes. So given that said, Rocket, the reason I think it's interesting is because it's a situation that to me is a little bit dangerous. It's one of those situations where people don't believe that a stock could go down. Everybody's long. Not everybody, but there's a lot of people long calls. It seems like you can see the open interest here. I just removed the shading. You can see the open interest is pretty heavy on the call side relative to the put side. You go through that was just for the earnings this week. You go through here, and this one not so much because it's a weekly, but the May 21s, you'll see a lot of open interest here. And remember, the stock just went to 40, so you got the 24s, 25s, 26s, a lot of open interest. I suspect that people don't think it can go to $19. And, I would say that if you like the name and you want to be long it for the number, probably, because I think that the upside is muted to some extent,
Right.
because of these call open interest and all these call buyers, something like a 20, I was looking at the 23 for, let's call it $1.05, 23.26 for 60 cents, almost 60 cents. So 60 cents to make 240. If it gets to 26, that's not terrible, right? 4-1 on that type of trade. Now, can it get to 26? Not sure, but you'd have to think somewhere about 25, 26 to make that even a viable trade. On the downside, I wouldn't discount a move to $19, to be honest. I wouldn't discount a potential big drop if, again, the earnings come out okay, but the forward earnings is not so good. So they're kind of giving these away a little bit here, in my opinion, because I think the risk is a teen print, and you take a flyer on the 21.5s at 49 cents. It doesn't look that bad. So this is the way I'm looking at it here is, what if you see 19, 19. Okay, 18, it's for sure you're going to be way lower, but 19, 32 cents to 2, so 170. I even think you can, I don't even think you need 19. I think 19 and a half, this is going to be here. It's all break evens here anyway. So 19 and a half on the 21 and a half, that'll be 2. That'll be 3-1 on a 19 and a half print, which is, let's call it 13% lower. So right now the market's kind of looking at 22.70. So I can just look at the 22 and a half straddle, and that's 2.25. So the market's pricing in about 10%, exactly about 10% move for earnings tonight. So you got to, if 10% is what the market is expecting, you got to think higher. But you can believe that, it can move 15%. So I just don't, I think that the downside is offering you something where there would be a surprise, right? The upside, I think, is muted, and I think the downside has more of that surprise factor. So that's my take on the earnings going into it. I do like the stock long term. I do think that they're doing all the right things. This was obviously a humongous move on partial short squeeze, but they've killed a lot of people on the way up, and now it's below the 50-day. I'm a little nervous that they try to capture this. See this gap up here that first started where it first started moving up. So that's what I'm a little bit nervous about. So keep that in mind. If anybody owns the rocket and they're looking for the earnings, again, I like the company. They're doing stuff with AI. I read the earning transcripts. I think they're a great read on how to manage a business. The problem is the backdrop. The actual industry may not be the right industry to be in right now.
I see.
Okay.
Yep, you're right.
All right, good. Let's talk about the other big news today, which was
Peloton.
I mean, this thing is has collapsed. We were talking about a put buy. We were somewhere here, I think in early April. There was a put buy of the June 100s, June 100 puts. I believe they paid. I mean, you could check it, $3.5 or something like that. Why don't you show the?
Let's check it out.
Show people where they could find that video, at least to look to see what we were looking at the time. I always find it interesting to go back and figure out what we were thinking and looking at that time, and how we were approaching it and what we were seeing. So you go to the YouTube channel, and right there on that search button, you click there, you click on Peloton, or you press Peloton and see that I think we had it insane move, that one right there. So that one I think is a good look to go back on. I
think it was this one 2 weeks ago. Yep.
2 weeks ago. Yeah. So you take a look and you kind of see what we were thinking. It's just always good to listen to what we were thinking and what we were seeing and how we were thinking about it. I think that's more important than being right or wrong over the long term, right? How we were thinking about it, what we were seeing, what the chart was saying, what was the market outlook at the time. All those things come into play, and I think that it's important to go back in time and see. So they were buying these things for $3. I think it was $3, and they're now. We could take a look at Peloton here. Peloton top traded options chart, but the Junes. Let's just go straight to the Junes first to take a look here. See the 16,000 right here. They're trading almost $20. So that was 5-6 times put that we were highlighting here. This guy killed it, and he caused, that put 16,000 causes, a gamma is a long gamma position and is a short gamma position for the dealers. So the dealers got to be selling stock into that. Now you have earnings tomorrow, right? Tomorrow after the bell, and you have massive put buying here in the 70s, 75, 80s, 85s, 90s. I mean, it's been massive all day. Maybe on a pullback that, you get 243. So what are we thinking here? So how do you approach something like this? I think a couple of things that you have to consider. One, in the recall, we talked in that video, we talked about the recall, where if there was a recall, imagine paying $4,250 because maybe it's a fad. Not saying it's a fad. Maybe it was a fad, or maybe in your neighborhood it was a fad, and everybody goes in because everybody's at home and buys a $4,200 bike, and then realizes after 3 months that they no longer ride that bike, and it's sitting there collecting dust. By the way, it's not unlike 40 other exercise equipment pieces that have come out in the last 30 years, right? You can think of Nautilus and all Solarplex and all these commercials you would see. So this is what happens. So now, what percentage? I think the number was, I read 120 something thousand, 128,000 Tread Pluses were sold, and you, as a customer, you can actually now say, wow, I can send it back and they're going to refund my full dollar amount to me, that's incredible. And I can imagine there's, I don't know what percentage, but let's say it's X percentage. I would say it's decent. It's going to be a decent amount, but it's X percentage that is going to just say, I want a refund. So one, it doesn't look good for the company. Two, they got to dole out this refund. They probably have some insurance. I would think they probably have some insurance in there that covers it. Some people are going to say the bullish argument is going to be there's an overreaction here. The overreaction is that I think the trend, they're doing billions of dollars in sales, and the trend is 5% of that. Okay, that's definitely true. The stock was also, we've been talking about how much it was overvalued. To be fair, I was talking about it being overvalued around here. Then it went up here. I still thought it was overvalued. I thought it was a good purchase of what they had bought this. They were having manufacturing troubles going into the Christmas, into the end of the year. Definitely thought it was overvalued up here. And then it's just been straight down since, and it's been a dogfight around 100. So we're looking at this side of the mountain here. You're looking at, this never looks good. And then you got something like this coming at you, where, you're looking at, how low can this go? And it's, if you just do it by, there's a lot going on here, by the way. We're breaking this level here, right? So you have this potential, head and shoulders looking here. You have this neckline here at about 95-ish, and then you have this sort of ABC move down, and you're pointing towards right here. It's pointing towards around, let's just call it 55, and I guess can it get to 55? If at 55 it's still I think probably fit. What's Peloton right now? Peloton, PTON stock. What's the market cap on Peloton? So the market cap's $25 billion. And we said that 25 billion less, what is this? This would be 57, 26. So about, is that 30%? So 30% of 25, 7. So it'd be about, let's call it 17.5 billion dollars around it. It's still a big stock, it's still, there's a lot of billions in there. And yeah, I mean, how do subscriptions look? People start taking a closer look at what they own, right? Again, when something like this happens, it's, it's hard to sort of say, if a guy like BlackRock or somebody's getting out of this, they don't want to be in a stock where it's unknown how many people will return their money. What does this do to the brand? We talked about, we've been talking about Peloton versus like a Lululemon, and how, which would you rather own? I would always rather own, two growth names. I would always rather own the growth name that is withstood the pressure of the market, withstood the pressure of just generally things happen, right? The market crashes in 2009. Lululemon goes all the way down. It looks like it's going bankrupt. It goes from, I think, $1 all the way back up. These things happen. So how does, that, when that happens for a stock and for a company, you learn a lot. You learn about process, about, panic, and how to deal with it as a CEO. This is new. I mean, there was a issue over here about manufacturing, but this is a big brand issue. And so how does it handle that? I don't know. But the options are, to buy the 80 puts ahead of the number. It's pretty simple. It's basically saying here, they're thinking somewhere closer to the 70s, right? So this can 84 down to 70 if you're paying 3. The reality is, you could see that they were buying these things at 30 cents, which is crazy. From this morning, they're now $3. So
wow.
Right. So they now went to $3. They bought them early in the morning at 30 cents. And that to me is incredible. So this is already a 10 bagger for people who are on top of it, saying this is really bad, like, really bad for the brand. And if it breaks that technical level, it's going to go low. So 30 cents, 50 cents, $1. People have made good money on this already. Probably when they bought it, they were buying it, they might have already sold some out here. But they're buying it because they think, even at $1, you would think closer to the mid 70s. Okay. If you're buying the 85s this morning, they were coming in for those as well. Look at the 85s, were only 75 cents to $1, quickly went to $3. So paying, let's say on average, $3, $2.50, $3 for the 85s, and you're talking about high 70s. So I would say, the market right now is probably anticipating high 70s. call it 75 to 78. And, for Peloton on the downside. And then on the upside, if people are taking a flyer, on the way up, $92.40, they're allowing you to pay $240 for the 90 calls, which means, somewhere closer to about 98. I would even say par, which doesn't sound like it could happen, but you get everybody out of the name now. It crosses back that neckline, and then you go to 115 just because. I'm not saying it's going to happen. I'm actually in the slightly negative camp right here, like slightly down. There's so much open interest and so many people want a big move here. I'm in the camp of 80 to 90 tomorrow by the end of the week, where let's wait till the that expires and you get a lot of people out and out of their position, and then I think it dribbles lower over time. But that's what my initial thought is. There's so much people looking for this. They got the 85s, the 80s. There's millions of shares here now looking for a dump, and I'm not sure the market likes to give it. The market's already given people a 23. So they've already given you a 40-point move. Probably about a 30-point move since they started talking about it. So it's $40 from that initial high. That's my take on Peloton. That's what the market is saying here today. Let's look at the Junes. I just want to see if they're buying. So it looks like they're actually buying all over the place. So it looks like 350 over here is these are probably being bought. Yeah, so they're being bought on a bounce back. Somebody's trying to play a bounce back here, but people are playing this around. I think what really hurts people here is 80, 90, and it stays to 80, 90 for let's call it. I mean, it goes up. Maybe call it 75, 100. 75, 100 is going to you're not going to win a lot of money in Peloton right now. Right. 75, 100, you can make some money, but it's just going to be tough. It's going to be choppy up and down. And, after a move like this, it's probably what it wants to do for a while until it decides where it's going to go next. Okay.
Cool. Okay. Nice.
Cool.
Let's,
that was Peloton.
Why don't we jump into some gaming, right? We got ZNGA.
ZNGA. The bane of my existence, ZNGA. So ZNGA name that not trading well. A lot of these games I think are getting beat up because of the reopening. Let's look at the daily. This is, I'll just go a little bit further out. 2 years. I just want to see. So this here is never so good. We're seeing a lot of this. We're seeing a lot of it here where you have this move here, a rejection, and then a lower high here. This has to see this 50 days. You want to see that sort of, you want ZNGA to hang around 10 and a half at least, not, let's call it above the 200. So it doesn't crack that and then go lower, but this is not trading great. Long term, we got buyers up, in the $12 range. Long term buyers thinking it goes to a double. They've they've essentially bought call options. $750 million worth of call options up here. They got a lot of things going for it. They got a lot of eyeballs on their games. But it's the reopening. People are not giving credit to any of these guys that the reopening is gonna keep people on their platforms. So we have what are we looking at here? ZNGA
Maze, yep.
May
put spread roll down.
Going on here. Gotcha. Okay, so this put spread 10 and a half put spread rolled down to here. That seems silly to me. It seems like just paying commissions, but right, it's just like taking. All right, so it looks like they're taking some money off. So this is 46 cents, and they got into something worth 26 cents. So they took some money off here, right? You see that?
Yep.
46 cents. So it looks like this was a buy put spread. Now they just rolled it down to another put spread. It's a $1 point put spread for a quarter, 16,000 times. Yeah, it looks like they just took some of their money, probably most of their money off the table. Now they have a put spread. I think when you look at gaming, you look at something like, so that's it. I think ZNGA long term is good. I think again it's eyeballs, remember we talked about the first party advertising and and data. Well, when you have a platform that has millions of users, that's what advertisers are going to want now, because you're going to know where your users live, who your users are, how they move around, and that's what advertisers pay for, right? So first party data is the new gold in this environment when Apple shuts the door on privacy and tracking. So I look at something like, you can bring that, and I look at something like ATVI. So ATVI has this number yesterday, and they killed it. I mean, they destroyed expectations. They higher revenues, higher margins, and we're not talking about a small startup. This is a company producing billions of dollars in revenues a year, and they're growing revenues and they're growing margins. It's really an insane story. I think we'll look back and see this a hell of a lot higher by the end of the year. You got to imagine, forget about the names, right? World of Warcraft and Diablo and Call of Duty, forget about that. Just think about it they have these franchises, right? And they took one franchise and they took it from, say, 20 million buying the product to 120 million actually playing the game. And they did that with a freemium model. And it's scalable. It allows them to actually sell 120 million people skins and new guns and maps and everything else, and create these in-booking purchases, which are just going to drive up revenue. And that's what you're seeing. It's explosive. I mean, it's truly explosive what they've done here. And the plan is to do it on this franchise and this franchise and the next franchise, and just open it up. They're talking about 1 billion eyeballs, 1 billion users on their games, call it in the next 4 or 5 years. And how do they do that? They just replicate what they were doing here with this freemium model. And make no mistake, it takes know-how and it takes management skills. I'm sure they're paying millions of dollars in consulting fees to understand how to do it. But once they get it down and they get the blueprint down, they just open it up for each different vertical. It's, to me, margins will just keep going up and revenues will keep going up, and it's a growth story. I think it's around, even if, yes, people say that why isn't it trading as well as it should be trading? It's not trading as well as it should be trading because they actually lowered the full annual. They killed the quarter. The annual, they lowered it. I think they just lowered it to make sure that they can beat it, right? It's good management. It's saying, we know what we got. If you're the manager there, you don't want it to get too far ahead. You say, we know what we got. We're going to allow our numbers to showcase over the next 3-4 quarters. We're going to take a hit because of this reopening, and maybe they're seeing some of that, fine. But we're going to make sure we beat our numbers every quarter here going out. And once they do these new verticals, analysts are not going to step out and say, when they do this, it's going to be this. When they do this, it's going to be that. They wait till Diablo is announced or World of Warcraft is announced, a new vertical, and they're going to do this freemium. They're going to take the blueprint and do it on each vertical. They wait, and sometimes waiting, it's too late, because once the numbers show, the stock is takes the next jump.
Right.
I think this is a great company, and it's got great games, and they're going to be able to monetize. Here's my thought. I'll tell you what I think, and this is how I think. I look at something like Snap, right? And Snap did this. They basically said, you know what? We need content. We need people to come on. We're going to pay $1 million a year, $1 million a day, okay, to influencers to post videos. Well, what does that do? All of a sudden, Snap's monthly AUs just they shot up. People are jumping on it to put videos, and that builds their platform. And more people jumping on, more videos, more engagement, more advertising. All of that is positive. Well, if you look at something like ATVI, and off the top of my head, I just thought, if I had 120 million users playing Call of Duty, why wouldn't I just say, you know what, we're going to pay our Call of Duty franchise, we're going to pay $1 million a day to the best gamers on the platform. What do you think that's going to do? You think there's going to be 120 million? There'll be 400 million people on the platform playing the game. And then, by the way, the only way you could really be good and really be in the top, say, 250 or 1,000 people that they pay, you'd have to go in there and buy a $1 gun. You got to buy $2, jacket. You got to buy a helmet so you don't get killed. You got to buy the sniper rifle so you get the real. And ATVI programs these games where they say if they drop a you're in some place in some forest and they drop a guy with a blue uniform. And if you kill that guy, you make $5. And you're like, okay, well, the only way to kill him, he's so fast, you need one of the bigger guns. So you invest $1 to get the big gun because he's in your eyesight. How much money would they produce? Just thinking through it, it's like, once people start saying, I could actually make money playing this game, playing off of, and they have some of that already, the competitions, which I think that's coming next. But, when people can make a little bit of money, when you have 120 million people playing and you have AI following every move they make, it's a math formula. It's not difficult to say, if we spend $1 million a day, we probably make 4 million a day. So let's spend $1 million a day. And if it works, let's spend 2 million. And at some point, the numbers just grow. So that's how I think. And that's, I'm sure if I'm thinking that, I'm sure the executives at ATVI are going, just get the eyeballs. If we get the eyeballs, everything is going to be fine. We're going to make, 2 billion a quarter is going to become the base level. It's going to start going 3 billion, 4 billion, 5 billion. So this thing is an animal that is about to explode over the next 18 months, in my opinion. And that's my humble opinion. But yeah, I mean, so that's what I think. And I think you have a lot of opportunity. Once you have, forget about first party, we're talking about first party, 1 billion people. You have how many people in the world? You have 20% of the world on your platform. You're looking at games on your phone. I mean, it's a lot. And I think that there's so much to do with that. And so that's what I say. I'm on the hook saying I think Microsoft should buy them. Like, why wouldn't Microsoft just come in and why mess around? They bought someone for $10 billion or $7. Like, why mess around with a rinky-dink one? Pay ATVI $100 billion and let's go. Let's let's be the Netflix of games. Microsoft has 150 games. Let's be the Netflix of games, and let's, not only do we sell them computers and graphics and this and everything else that comes in the middle, we got to pay, but everybody, everybody's got to get that PC. Everybody's got to get all the equipment. And all of a sudden you got Microsoft backdooring Apple into the PC business, right? Yeah. Maybe you can't be playing games off your Mac, you need the PC and you need the engine. And so people start, slowly getting back into that game. And now we're talking about 20, 30 years of rotation from Microsoft, then to Apple. And now maybe there's a back door to get back into Microsoft.
Especially with these younger folks.
Yeah. If we're talking about this here, like two dumb idiots, then, these guys are smart. This is their business. This is what they do. I think, I hope, I don't know. Or maybe I don't know. I dream about this stuff and I go, well, this seems so easy to think about. Anyway, that's my rant on ATVI. It should be trading. The stock, it's a good stock. Okay. Yes, the reopening is going to hurt them. Zynga, the reopening is going to hurt them. Snap, all these things. But at the end of the day, that user is becoming more and more. You on the side, everyone on, we are becoming more and more important to who's going to be the winners. Right. And that could lead us to, I mean, we can then talk about, let's look at Microsoft. Let's look at Microsoft. Here's Microsoft. Okay. So let's start a new one. Microsoft, God bless them. What is it? These two are getting divorced. They're like 70 something years old. I mean, the party just started. I don't even understand what's going on. Bill Gates, and then you hear he had an account. He's like Warren Buffett. Warren Buffett has his concubine in the back, in the backyard. And a lot of people don't know this. His concubine in the last in the back of his lot in Omaha, Texas, in Omaha, Nebraska. This guy Bill Gates had written in his marriage contract that he can go with his ex-girlfriend every year to North Carolina. I read. I was like,
wow, that
doesn't go well if you don't have $50 billion. I tell you that much. Every year you're gonna allow me to go with my ex-girlfriend to some North Carolina ranch and for a week. Who does that? That's like, who that? And the last person, if you told me I don't know, give me a guy that's you told Alex Rodriguez has that in his contract. I'm like, makes sense, right? It makes sense. He's gonna get married. I got to be able to go somewhere. When I saw Bill Gates has this in his contract that he can go with his ex-girlfriend somewhere, I just thought, Bill Gates, wow, I didn't, but whatever, man, $50 billion, you can do whatever you want in the contract. So right. Microsoft, let's look at Microsoft. You have this stock. I mean, this is a bullish chart. The stock's down like the big names. So let's take a look quickly at all the big names. But stock down, and the stock is coming right to a level. The 50-day. These are all it's pretty. This was kind of like this here, a little bit here, but you know, it's pretty easy to see. It's 225, 240, 245, call it, and 265. And the stock has dropped. It's given you 13, 14 points here. What's the next move? I have no idea, but it breaks 245 here. You could see some weakness, but I think there's going to be a lot of buyers in the 230, 235, unless the market really comes off. So that's something to look at here. But Microsoft, this is fairly bullish. Let's look at another name that I'm watching just to gauge because it's in the advertising space, and that's Google. The one thing I don't like about this is a good chart again. Same thing, constructive, going up. Nothing really wrong here. You know, we have here steps. This step here, this right here, you got, you know, something right around here. I'm just kind of drawing lines here like a kid. But the one thing that is interesting, this is that I saw yesterday. So right here, you have what's called, this is called an evening, not an evening star, an island top. Evening star is, I'll show you an evening star. So this is called an island top, where you basically gap up. So what we should do is, let me just show it to you just to, let's do 6 months. Okay. And we want to do, sorry, I put 6 years. No, not 6 years, 7 months. Fine. Okay. So island top is a gap up for a couple of days and then a gap down. Okay. So this is an island top here. Okay. See the gap from here to here? And then a gap down from here. So this is called an island top. Island tops are generally bearish. You know, it's, you know, decent percentage, higher than 50-50, but I would say probably 65. I don't have the exact numbers. I'm sure you can look it up and start looking at island tops. But, you know, it's 65% that it should trade a little bit lower. If you see it hanging out, if it doesn't trade lower and just hangs out here, then that's a bullish sign and it should go higher. Right now, if you're looking at this name, Google, it's been trading. I mean, this is how you want a stock to trade, right? It just goes up, sideways, up. This is trending a little bit up here, has a little bit of problems here, but they bought it. They sold it here. They bought it here. So this is, look where they're telling you they bought it, 22.50, right? They picked it up here yesterday. So island top, something to think about. You know, it usually marks the top of a name, but this is a very, very strong stock that is just climbing this ladder all the way up here. So Google, bullish, call it over the last year, maybe having a little problems up here. We'll see over the next couple of weeks. Let's look at, what's another one we'll look at? We'll look at Facebook.
Yep.
Facebook was a name that, you know, we pointed out here with this. What was interesting about Facebook was that there was two different types of buyers, right? There was the growth buyer, and then there was the value buyer here. So the stock here, we were looking for 230, hit 230. Now it's come back. I mean, it still looks pretty good. You know, the gap is towards the 309, 310, but you would expect some buyers to start coming in. Let's call it starting right about now, 315 to 310. You would expect some buyers. If not, you know, again, this chart, keep an eye on this chart because, you know, this moving up like this that's pretty strong. You know, the difference between the 50-day and the 200-day is not, this is wide. Now it's not that wide. So you might get a little bit of a pullback and then this keeps going up and up, and, you know, you can get a nice move up here in Facebook. So I think Facebook is still positive. You know, I'd like to see some trading around the 310, 330 range before it starts making its move, just like it did over here for a few months. It's just, you know, natural for these things to do it that way. And then the one that is looking not as strong as the other ones, but it's still, you know, so. I would just say the other ones look a little bit stronger. I would say Apple here was sort of rejected here, and rejected here. And, you know, you have this obviously still going up. So this one is, I would say, bullish, but tempered bullishness here, right? We were talking about getting long around here, right? You can look at the video somewhere right around here. There was, I believe it was early, maybe late March, but somewhere before this move, we were talking about getting long. We're talking about hedging, I believe somewhere around here. Okay, somewhere around here, we're talking about hedging. Yep. And now we are, let's call it 129.38. I think the hedge was I want to say it was in May, and I want to say it was like the 130, 120 put spread versus some call up top that we were paying $1.50, $1.60, or something like that. Then the spread right now, I'm sure, is up a little bit. So that was probably, you made 100% here, but now you're at the 50-day, and maybe you want to actually, if you're bullish, you want to get out of that hedge and sort of, start thinking about these names until they crack. You have to continuously buy that 50-day moving average and sort of even the 200 if it goes through. So I still think it's bullish. I just think it doesn't look as strong as the other ones. Like the Facebook is showing higher highs, the Google is showing higher highs, Microsoft showing higher highs, but it's come down. This one is now showing a lower high, and it wouldn't be as bullish as the others.
Okay, cool.
All right.
Fair enough. Yeah.
Good.
Why don't we take a look at one we were looking at yesterday? And that's SABR, and I'm seeing some
SABR. Yeah, we said the
call buying.
There was put selling, call spread buying, some put selling, call spread buying. So stock is down 42 cents. They were selling the 10s, I believe, right? 10s? I think
10s or 11s. I think so. Yeah.
Yeah, I think the 10s, and they were buying the. Let's see here. What are they doing today? SABR?
Yeah. They're looking at buying calls in April 2022.
Wow. Buying calls? Let's see here.
It seems like, or selling.
Okay,
I don't know.
So here's what I would say. First thing I'm looking at. So I see 47,000. I see a lot going on in June, July. So we'll look at that in a second. But in April 22, which is a year out, I see the volatility down a little bit. And generally, these guys, the big hedge fund managers are not playing so far out. They're generally not doing that. I'm not saying they don't. I'm just saying generally. So I'm looking at the 17 calls, and yesterday, let me check my notes.
Yesterday was.
I got the 11 puts.
Yep.
Selling the 11 puts, buying the 14-18 call spread. Okay, so they were buying the 14-18 call spread, getting long, at for sure at 11. The market, they're telling you. So this is that trade yesterday was telling you they'd be a seller at 18, right? They're willing to give it up at 18. So today, all in one shot, 102 on the bid, 46.8. Let me just see something. Yeah, so 46.8. So they sold these. They sold these at $1.02 with the stock $12.65. So $12.65, $1.02. So that's basically 8%. So they basically are saying this is someone. Yesterday we saw someone getting long, essentially getting long at around 11. This is probably someone getting long and saying, "I'll take the 8% dividend, if you will, or the premium, because I'm a seller up at 17, and I'll take the 8% just because I'm owning stock." So that is someone who's long a lot of stock, or who's getting long a lot of stock, and is saying, "I'll take the 8% while I wait it out."
Okay.
Is that fair?
Yeah.
Yeah. So that's interesting, because we always talk about buying. In this case, selling. I don't disregard it. I look at it for the clues, like what is someone doing? So someone is selling SABR, likely long the stock. So they think the stock is good, but they're going to collect an 8% dividend while they wait. So an 8% premium dividend, whatever you want to call it, as they wait. So that's just telling me that someone's very confident in owning SABR, but not confident enough that it's going to get taken out, or it's going to, go to $25-$30. They think 17, 18. Yesterday was the trade, and yesterday was 18. Today it's 17 with $1 in premium. So that's 18. That's how I would read it.
Okay.
Fair enough.
Okay. Yeah, I like
good.
that.
Good.
Okay.
Good.
Another one I saw was TECK, TECK.
I
think they're in resources, Canadian mining company. Yeah.
Yeah, someone told us about this thing. They showed us about that. This was back in March, April. I believe someone was talking to us in March, April. TECK. So what has happened in this name? Gotcha. It's come down March.
You're looking at April 15th or 16th, 25 calls, I think. When we looked at
That's when April what?
April 15th, expiration, 25 calls.
April 15th, 25 calls. They were buying those.
Yeah.
What date was that? In March? They were
sometimes in March, I think. Yeah.
Right. So maybe here at the lows, I think it was right around 19 in the 19 range. So someone came in and bought, the 25. So, and what are they doing today? Probably buying. This is copper. So probably buying calls, I'm assuming.
Yep.
TECK. let's see the Junes. What are they doing here first? I'm gonna look at it. Wow, good amount. All right, so we're looking at volatility's down here, 43 on the day. So that's a little worrisome if they're buying. But let's see what was paid. Look at the volume here. Offer side, 44.4, 43.3, 45. Okay, so looks like these were bought. 44 gets us to about where it was yesterday. Okay, so it looks like these were bought. I see the implied vol hanging in there, though this warps, this one little here warps the screen, and stock has been trading up. So I suspect that this is a buyer. It looks like a buyer, considering that I've watched this when it first came. So it was, I remember they were April options. Now it looks like if we look at May, yeah, that's what I was seeing. We were seeing a lot of, see this open interest here, 22s, 23s. So people were buying the May options. And now that May's coming up in the next, call it 3 weeks, 2.5 weeks, then you now have them looking at June options, which makes it somewhat interesting, right? They keep coming back to the name, and the name has not exploded yet. But remember, when they're buying options, they're looking for an explosion. So the name hasn't exploded yet, and they keep coming back for Aprils. They come back for Mays, and now they're coming back for the Junes. This looks like it's breaking out here today on good volume. I don't know what the let's look at this here. Let's go back a little bit more here. So we're seeing, okay, here, good. So yeah, and I think we could see what they're looking at here, right? I went back 5 years to sort of figure things out here a little bit. And because I'm always looking to see what's the high, right? Where are the bulls sort of looking to break the high or take it higher? First thing is they got to get to the high. Then you start talking about, all right, we're going to break the high. And you get to like 29.5 here. They were buying to 25s, and look, copper's been trading tremendous. And you have this sort of nice V here, looks pretty good. And then it's trying to break this level. You got a little bit here at the 25 level, and then it's sort of, for whatever reason, you could see 25 happens to be a little stickler here. And then after you do that, you got 29.5. So this box is what they're playing for here, which I think if you looked at it like we just did, it makes sense, right? Okay. It makes sense that, okay, they're playing a break here, and when you get a break, you got to get through that 25. If you get through this 25, it's a pivot level, so you got to start getting another move higher, a quick move higher. So they're looking for that break here, and again, it was rejected. The downside was rejected. It shot straight back up. It's good to see that. We're looking a little bit, because we're on a wider screen, the V looks a little bit more pronounced than it may actually have been, but it's still a good rejection here in late March, early May, right back up to where it was in February, right? They took it down, then they took it right back up, and now people are still buying. It's just a good sign to see. They were buying the Aprils, they were buying the Mays, now they're buying the Junes. They're still looking for this sharp move higher. I don't know if there'll be consolidation in the space. I don't, maybe there's rumblings of that. When you're starting to see people come back month after month after month, sort of buying those dollar calls, and and then you're seeing an industry that, maybe there is. I don't think there's been any consolidation in the copper industry for a long time. So, maybe there's rumblings there. Maybe there's something going on bigger than just, they're producing more copper. But I think it's a very good sign to continuously see people. You know what? If I remember correctly, I think it might have been Brenda who showed us that. I'm not sure, but I think she was the one. I'm trying to remember in my head who showed us that. So, okay, so that would be tech. And just that they're coming back, they keep on buying these dollar calls. I think it's really interesting.
Cool. Okay, nice. I like it.
Good.
I like it.
What else we got?
I got also Target. It kind of looks like a similar layout as the SABR yesterday.
Target. Target is it's in fuego. This stock doesn't go down at all. This is like incredible move. Let's see this. Hold on. I mean, it makes sense that they do run a great business. Let's see here. All right. I mean, this looks pretty bullish to me. You know, there's no holes here really. All right, so I'm just looking at here. I'm looking at sort of this level somewhere around. Let's call it here. Yeah. And then this high breaks. This was a quick one. Then it goes here. So we have this range around 200. Let's call it 200 to 165. It breaks through and it's still chugging along. You know, this down to here, up to here, probably takes it a little bit higher, is my guess, towards 210, 20, 230. And I think that's how you would look at it. You know, this is pretty good. This move through 200 is pretty good. And here it's showing strength here again. I mean, this is a bullish chart. What are they doing here?
It looks like buying a call spread and selling puts.
Buying a call spread. May?
Yep.
May. Okay, so you get earnings on the 19th. And some action here. So look, 1600, 1619. So something's going on here. 1619. 1619. 129. 28. 38.6. Okay. Just gotta try to make sure what we're looking at here. So we're looking at, is this a buyer? It's all mid-market, so it is a little bit difficult to say sort of buying or selling. And there's a lot of whack. There's some, the market was down. Pricing mechanisms were down in the market earlier today. The 230s. Let's just see what it was here. Oh, well, that's a good sign. So there's a little bit more on the bid side here. So, all right, let's assume they're doing what logically would make sense. They're buying the 212.5s, selling the 230s, and selling the 195 puts. Okay, so stock is trading 212.5, right? 212.72. So right there, they're buying the at the monies, selling the 230s. So this call spread. So let's call it 630 and 130. So how much is that? $5. $5, and then they're selling the 195s at $1.20. So call it 380. So they pay 380 for the 212.5, 230 call spread, which is how much? $17.5. $5. Okay. So it's not making me go like crazy. Like, you know, it's I like when we're looking at the apples and we're finding stuff for like $1.50, $2. But I understand. Maybe I would. What they're doing is interesting. If they're selling this the 195s, they're selling the 195s. They're basically saying we'll buy it here, which is the 200 day. I'm sorry, the 50 day, and it's right next to $200, which is where this break was. So they're willing to. They're saying, please give me a shot to buy it here. Otherwise, I'll make some money on the way up. And they're looking at, what was it, 230? Well, it was exactly where we're kind of looking to see where this doubles. Here. So I like the trade. It makes sense. I think the price probably get a little bit better price, but so be it. 195, they're a buyer. Makes sense. It's right above the 50 days right there. And then they're trying to play this last hurrah up top, or, you know, earnings coming out in a week and a half. So I like the trade. I mean, I like the idea of these things. It's also, they might be selling a little bit of stock here and saying, let's just take out a little bit of the middle, right? It's a good risk reward trade. I'm going to take out the middle here, which is 12 plus 5, 17.5 points here. And, you know, we're going to black this out right here. We're going to, from here to here, we're not going to be involved. And we'll play above here and below here. Okay.
Fair enough. Yep.
Good. I like that.
I like it. One more I have, and that's really similar to this one, is TEVA.
Sure.
TEVA. And we've been seeing a lot more of these. I don't know, like it's quite different from when we started.
I tell you what, it's not because I'm saying it that everybody's doing this time. It's not the case. It is just, this is the time where I know that people are looking at these types of trades because
Uh-huh.
the market is not moving as much as, nobody knows what the next move is. And people are saying, I will buy the stock here. They're getting anxious to saying, do I buy the stock? Do I not buy the stock? It's trading well. The market's trading fairly well. I mean, it's strong. It's not going down, right? It moves up from 370, 380 to 420, and it can't go to below 416 and a half for more than 8 hours. I mean, it's strong. It's definitely strong. So I think people are saying, okay, how do I get long some of these names without going all in? Like I'm concerned. I'm not concerned about a crash. I'm concerned about 5% down, right? I'm concerned about 5-6% down. So being concerned about that, how do I start playing the game? Because I need to put some money to work here.
Yeah.
So what is this TEVA you're seeing?
Yeah, TEVA.
TEVA.
In December. Same type of lineup.
Okay, so in December, it looks like let me try to fix that. TEVA. And for whatever reason, it's not coming on now. Oh, here it is. Okay, so 4,000 call spreads. The 11-15 call spreads. Someone's looking like they're buying 4,000 of these, and they're selling 2,000 of these. So it's selling half. So I suspect they're doing that because it's going to get them to like $0. Is and that's usually how it works, right? So 11. Whenever you see some sort of ratio, it's to get somewhere, right? So 11 to 15, 4,000, 115, and call it 115 and 32. So it's about 83 cents. Right? So 83 cents, is that right? Let's see what they paid. $11. So they bought it here when the stock was going down. So they paid, okay, so they paid 110, right? 110.
Okay.
They sold these where? 32 cents. 32 cents. So 110, 32 is 80. What's that? 110, 32, 78 cents. 78 cents. 78. 110 and 32, 78 cents, and then 78 cents, and then let's see here. Maybe they sold these. It looks like maybe they sold these here at $1.20. Let's go to $1.22. So 78 and $1.22. $1.22 divided by 2 is what? 61 cents. So 17 cents. So they paid 17 cents. But it's really only 10 and 11. So I to be honest, I don't like this trade. If I was talking to one of the big guys, I would just say, just buy the 11-15 call spread. Just buy that for 80 cents. That's what I would say. Why mess around, selling 2,000 of these to make it not just, if you think it's going up 11-15, you pay 75 cents, call it 77 cents to make 323. So, just buy the 11-15. Don't sell this one for that. That's what I would say. It's just everybody.
What about selling the nines? Yeah.
What's that? Or
selling
even maybe
the nines,
selling
4,000 times and break even. Yeah.
Maybe something like that. But even so, I would, there's risk here, right? There's a $50 billion lawsuit that if they lose, it's not, it's ring the bell.
Nice.
It's not good. So if they don't, and they could settle and everything is good, and now we could just focus on TEVA and focus on what TEVA does instead of this backdrop of a major lawsuit when nobody understands, are they going to go bankrupt, not go back, then the stock shoots up. So just buy the 11-15. If it works, it works. And if it doesn't, you got the full year. And if it doesn't, you're not worried that it goes to trade. Look, the open interest here is 23,000. So, you have 23,000 there. Somebody thought it would go to 7. I don't know when this traded, but this could trade 6 again. I mean, it just traded 6 last year. So I wouldn't. This is so tight. It's 11. It's 10-11. It's too tight. It's basically like getting long stock and selling the call. So, this is too tight here, and I would just not do this. This doesn't seem like it's doing anything for you. All it does is clog you up with margin. It's like you're long there. So I would not do that anyway.
Okay. Cool. Yeah.
If that was my client, if that was a big guy and he said, "Hey, Felix, I would don't do this. Don't do that." Okay.
All right.
All right.
Cool.
What else? Any questions? That's it. Or we are up 2 o'clock.
Exactly 2 o'clock.
Exactly 2 o'clock. All right. So let's Tomorrow we'll talk about. I wanted to say one more. We'll talk about like the oils and stuff like that, but we'll look at it tomorrow. I like this. I'm looking at this Oxy real quick. Something like this oil. I don't understand how some of these names. They're out of favor, they're in favor, and all of a sudden it's like MPC looks like it's about to explode. ExxonMobil's been trading well. Oxy has gotten killed because Icon sold 30%. But he's allowed to sell some stock. I mean, he bought up to I think it was close. He had more than 10% in Oxy, and now he just sold some. He's going to be left with 8%. Okay, and people were like, oh well, he was one of the big holders. And people are paring down their books right now. The stock market's at all times high, so people are paring down their books. If they're paring down their books a little bit because they want to they're getting ready to get into distress if something happens or whatever they're doing, but maybe they find other opportunities. They pare down their book, and all of a sudden, Oxy. They don't want to sell Oxy because he's 10%. If he sells a share, he has to declare that to everyone. And everybody says, oh, he's selling. So he waits on his holdings where he has like 10% holdings. But as he's bringing his whole book down, Oxy becomes a big percentage of his book, his overall book. So he's going to sell some. So he sells a little bit. And now he still owns 8%. It's still a big position. Mm-hmm. So I think, the stock has gotten killed. Oxy, when oil was getting close to zero and went to negative in the futures, when oil was going down, Oxy really did look like it was going out of business. Okay, because they made a mistake buying Anadarko. They were going to integrate it, and then they were going to sell off pieces that they could sell off and bring back some of the money that they invested to pay off the debt. They took an enormous amount of debt on the books, and they're like, all right, this will take a year to kind of figure out. The pandemic hits. And it was a disaster. So their cash flow that they were making from this oil doesn't, oil goes down. They're not making any money. They can't pay off the debt. Their accounts are being depleted. Their cash accounts are being depleted to pay off the interest. Interest doesn't stop just because of pandemic. It's like, people got to pay. So it looked bad. Then oil pops up to 30, 40. People are like, oh, thank God they're Oxy's going to be able to make some money, at least make some money to cover their interest payments. That was $40 ago. That was $40. It's we're talking about oil's trading close to 70, and it's not like it's been there for a week. It's been there since almost the beginning of the year, talking about 55 up to 70. They got to be printed money. Exxon came out with earnings. You could see they printed money. A lot of cash flow. So the positive news for Oxy is that if they can actually take that cash and somehow talk away the dividend, they have a dividend for a penny. They just left it there for a placeholder. Say, hey, look, we're gonna do the dividend again, but we're gonna take this money here right now. It's better for you if we just pay down this debt. Assets with oil back in the 60s, 70s, their assets that they were trying to sell and they were fire selling, 4 or 5 months ago. Now those are producing and they could sell them at a bigger ticket. Maybe keep selling those off, and then all of a sudden you can look and say, man, two years down the road, Oxy is going to be printing cash, like printing it. And so you got to have a little bit of foresight, and you got to pray that oil doesn't go back to 25, $30. That happens, Oxy's, dead in the water. But right. I think it offers you an option. And I think that's something that Icon was looking at, right? It's offering him an option, and it's a big option. It's a big company. It's a big money at stake, but it's an option nonetheless. If oil stays above 55, 65, Oxy in 2 years probably trades $50, $55. Right. That's just the math, right? It's got to stay, the markets can't go in recession. Oil can't go back down to 40. So anyway, that's how I look at the oils. It's not that I'm rah oils right now. I'm looking at specific names, and I think that there's a lot of opportunities still. Look at this MPC chart if you get a chance, maybe for homework, and that looks like a pretty damn good chart. All right.
Will do. Great.
I got to go. I'll talk to you.
All right. Thanks, Felix. Thanks, everybody. Like the video, subscribe if you haven't. We'll see you tomorrow.